So again, thank you for joining us. We wanted to just give you a quick overview today of a great new long-term savings benefit for you that HP just recently announced in your 401k plan. In the industry, it's oftentimes called the mega backdoor Roth conversion. And it's something that especially for higher income employees and those that have pretty substantial savings capacity, it can be an excellent financial planning tool. So we've got a few people on here today who aren't really familiar with Aspen Capital Management. We're a wealth management firm that serves a lot of both current and former HP employees, not only up and down the West Coast, but really across the United States. On the left, there's myself, Mike Mers. We have Katie Dow and Joanna Adelson that are also on our advisory team. Joanna and Katie are going to be taking you through some of the specifics of the new benefit today. And then Rachel Rant, who heads our operations team, is going to be giving you some examples of exactly how to go into Fidelity and set this new benefit up. So if you have any questions, again, feel free to ask, or you're welcome to reach out to us via email or phone afterwards. As I mentioned, this is a great benefit for people, but most importantly, it's really a benefit that is designed for people who have the saving capacity above the maximum pre-tax 401k contribution limits of $19,500 if you're under the age of 50, or $26,000 a year if you're over the age of 50. Many of you may know that as financial planners, we do everything we can to try to get money in the form of a Roth IRA, because that money grows for decades tax-free, not tax-deferred like your pre-tax 401k contributions. The only catch with this, and why several people are unable to do this, is there's income restrictions. So as your career progresses and you move up that income ladder, you phase out your ability to actually participate in a Roth IRA. This new functionality, or this new benefit, gives us the ability to get money into that Roth IRA format. So with that, I'm just going to turn it over to Joanna, and she'll walk you through the benefit.
Good morning, everyone. So over the next few minutes, we're going to review your current 401k options and the newest feature of after-tax contributions and Roth in-plan conversions. These new features will give you the ability to maximize your retirement savings and potentially reduce your tax liability. Rachel will also show you how on the Fidelity website you can make any changes to your current contributions. We will start with how it has worked in the past. Before, your only options were pre-tax and Roth 401k contributions. With pre-tax contributions, you pay taxes on the withdrawals at retirement. With the Roth 401k contributions, the withdrawals at retirement are tax-free, just like Mike mentioned. HP matches 4% on these contributions. However, there is a combined limit of $19,500 if you are under the age of 50, or $26,000 if you are 50 years of age or older. Now let's review the newest feature of after-tax contributions. This option gives you the ability to contribute above the maximum limits I just mentioned. However, you can only contribute up to 9% of your eligible pay into this after-tax contribution bucket. It is unknown to us if bonuses and commissions count as eligible pay, so please check with your payroll team on this. There is a maximum dollar limit of combined pre-tax and after-tax contributions, and those are $58,000, again, if you are under the age of 50, or $64,500 if you are 50 years of age or older. With these after-tax contributions, the withdrawals at retirement are tax-free, the same as the Roth 401k contributions. And HP does not match on these specific contributions. Katie will now show you an example of how you can maximize these two options.
Great, thanks, Joanna. So here is a great example for you to look at. This is assuming an employee that gets paid $100,000 a year. So what you're looking at on the screen is what you've always been able to do. So that pre-tax contribution to your 401k is maxed out at 19.5, as Joanna talked about. If you're older than 50, it's at 26,000. And then HP matches 4% for this employee, since it's an annual pay of 100,000. That's $4,000. However, if we move forward, now is the greater benefit. This is what's new for you. So now you have the ability to do an after-tax contribution of up to 9%. In this case, for this employee, it would be $9,000. So now your total contributions are $32,500. So a really nice benefit that you have to do that after-tax additional contribution. So that's the first new thing. The second new thing is now you have the option to roll those after-tax contributions into a Roth option. And this is huge. So there's two different ways that you can do this. First is an automatic conversion. The automatic conversion is our recommendation. And the reason being, as Mike stated earlier, there's no taxes owed. This money grows tax-free. And when you withdraw it, it's tax-free. So that's the best benefit. That's the way we want you to set it up. We'll talk a little bit more about that here to come. The second way you can do this is do one-time conversions of that after-tax contribution and put it into the Roth. The only bad thing about this is, for example, in that last conversation we were just having about the $9,000 of that after-tax contribution, let's use that as an example here. So if you made that $9,000 and it sat and it had some investment earnings of $1,000, so now you have $10,000. Well, that $1,000 you'd have to pay ordinary income on. So the automatic conversion, there's no taxes owed. With the one-time conversion, if there's any growth, then you have to pay ordinary income taxes on that growth. And this is just a note for your pre-tax contributions that you've been making all this time. Just remember that those are tax deferred until retirement. Okay, so we go back to another example for you to look at for this great second benefit for you, that in-plan Roth conversion. Take a look at what this could mean for you in the future. So for this is an example of a person here on the left-hand side that has been making their after-tax contributions without that Roth in-plan conversion. On the right-hand side, there's somebody that's making after-tax contributions with that automatic Roth in conversion that just goes right into that Roth. So on the left-hand side, they've made the same $150,000 accumulation balance over 15 years. There's the same estimated earnings. But on the left-hand side, without that Roth in plan conversion, they have to pay taxes on the growth of that $90,000, which is equal to $22,500. But for the person on the right-hand side that made that automatic Roth in plan conversion, they pay zero taxes. So the benefit to you is very big here, and you can see it. Remaining balance after taxes over on the left-hand side, $217,500. But for the person that did the automatic Roth in plan conversion, they get $240,000. So here are your big key takeaways. For those of you who max out your 401k contributions and have additional savings capacity, this new benefit is for you. If you're not taking advantage of your max and you don't have the additional savings capacity, then just focus on that first, and then you can think about this new benefit. But if you are, this is for you. Second key takeaway, you can save an additional 9% of your income in your Mega Backdoor Roth IRA. And that's a really fun, little name that you can share with your friends, and you're going to sound really smart. Mega Backdoor Roth IRA. So you can save an additional 9%. And again, this is the single most tax advantage way to save additional dollars. And thirdly, when you set up your additional contribution, you'll need to set it up with that auto Roth conversion. And here to show us exactly how to set up your additional contribution is Rachel. Rachel, do you want to walk us through it?
Yes, thank you, Katie. So once you log in to your HP 401k plan on the Fidelity website, in the center of the screen, there will be a contributions box, and you're going to want to select the button to change contributions. Once you select change contributions, you will be met with this screen where there is an option between easy contributions and change contributions. You will find the change contributions to be a lot more relevant to what we're trying to accomplish with the after-tax contributions. So go ahead and click on the Begin Change Contributions button rather than Easy Contributions. And then you will reach this screen, which has the various fields you can adjust by percentage for your different types of contributions. So on the left side in the top, you'll see your pre-tax desired and current elections. And this is the area where you're going to want to make sure that you are maxing out your pre-tax contribution. You'll see below that on the bottom of the left-hand side, there's an after-tax deferral section. This is what we've been talking about today, and this is where you can add up to 9% of your pay. Over on the right-hand side, if you are over age 50, you will have the option to add in elections for catch-up contributions. So once you optimize your percentage contributions on these different fields, you can go ahead and click Change Contribution Amount. Please note that these changes do take up to 2 pay cycles to reflect in your payment, so you may have to wait 1 or 2 pay cycles in order to see the changes you've made. Then you will be met with a screen that shows the summary, and this you can review everything that you've changed and then click Submit. Once you have started making after-tax contributions, you will be able to see a button that allows you to set up your automatic Roth conversion. And we don't have the visibility to see that on our end before you've set up the after-tax contribution. But once you have accessibility to that option, Aspen Capital Management clients can feel free to give us a call, and we're happy to walk you through the process.
So with that, we're going to unmute the line and open it up for questions to see if anybody has any questions for us today. We know we went through a lot of information there. So if you've got questions on how this might apply to you, feel free to fire away.
Hey, Mike, this is Mike Holmberg. Quick question. So this is available to us now. We could make changes to it. Is that true?
Yeah, that's correct. This is available now. You can go in now and change these settings. The important thing that Rachel did said is we do have one client that's already made these changes. And as Rachel said, it can take 1 to 2 pay periods for the conversion to actually kick in. So just have a little bit of patience. So while others are thinking of questions, again, I do reiterate, all 3 of us advisors, Joanna, Katie, and myself, are all well-versed in we're all well-versed in the HP benefits, the 401k plan benefits. So if you have any questions, please feel free to reach out to us either via email or the phone. If you've got a question right now, again, feel free to unmute your line and fire away.
Mike, this is Frank. Thanks for setting up this webinar for us. Really appreciate it. My question is this: what would be the benefit or the difference of going that route rather than maxing out the contribution to an existing Roth IRA that you have on the side?
So the benefit there is if you have a Roth IRA on the side, the max you can do is $6,000 if you're under 50 or $7,000 if you're over 50. Whereas with the after-tax contribution, you can do up to 9% of your pay. So if that's more than the 6,000 or 7,000, you can do that within the after-tax portion.
Hey, Frank, great question. This is Katie. Also, you have to keep in mind that the Roth phase out for your income. So your income limitation starts at 125,000. So if you make more than 125,000, there's a good chance that you just might not actually qualify. And that's for single, and then for married filing jointly, it's at 198,000. So that's just something to keep in mind as well.
Great question, Frank.
Thank you.
Yeah, you bet. As these guys said, so certainly for the high income earners, this becomes a real no-brainer, because for many of the high income earners, they've never been able to participate in a Roth before. And so this is really their only shot. Great question. Any others? Feel free to unmute your line and fire away.
So if you contribute to the after tax and do the Roth conversion, the 401k, when you end, like when you leave HP and you elect to roll your Roth 401k contributions made in this fashion to a normal Roth IRA, do those count as contributions that you can then pull out ahead of retirement, or they're kind of locked in the same way gains in a Roth IRA would be till 59 and a half?
We might need some clarification on the question. So one of the beauty of the Roth is there really is no such thing as gains or losses. It's really the same as your 401k. The IRS doesn't care really how good of an investor you are. With a 401k, every dollar that comes out eventually just comes out as a dollar of ordinary income. The beauty with the Roth is that every dollar that comes out tax-free. So it really doesn't matter what your basis or your gains, or for that matter, losses are on your investments. Every dollar that you withdraw from that after the age of 59 and a half comes out tax-free. So let me actually just come back to you and say, does that answer your question, or can you maybe just restate your question? Maybe we just didn't understand it.
Yeah, so like with a normal contribution to a Roth IRA, you can pull the contributions out ahead of 59 and a half for qualified purposes without paying penalties. If you roll the Roth 401k contributions into a Roth IRA, do those count as contributions you can pull out for those qualified reasons like education expenses and things of that nature, without paying the 10% penalty ahead of 59 and a half?
Yeah, that's a great question. And I don't think we can answer that definitively. We've got some opinions around the room, but I don't think anybody here can answer that question definitively. So I would tell you, we would need to look into that some more. So if you want to follow up with any of us directly, we're happy to do that. But I don't think we feel 100% confident answering that. Great question. Great technical question. Anybody else? Great questions so far. So like Katie said, really designed for higher income folks that have that savings capacity above and beyond maxing the 401k. Great benefit, the opportunity for many of you to likely participate in a way that you haven't ever been able to participate before with Roths. Other questions?
Yes, Mike. So this is Jeff Clausen. I set it up while we're sitting here on the phone, but I don't see how to automatically roll it over.
Hi, Jeff. This is Rachel. So
hello.
Hi there. So the reason that you can't see that yet is because it does take 1 to 2 pay cycles to kick in.
Oh, okay. So then you go back in.
So then you're able to have the option available to you to do that. So if
Got
you
it.
need help for a walkthrough when that is available, feel free to call us and we can walk you through it.
Okay, thanks.
Great questions. Jeff, glad to hear you're doing it right out of the chute.
Yeah, good job, Jeff.
Why wait?
Yeah, that's right. That's right.
I can change it next week if I don't like it.
Yeah, that's true. You'll like it. It actually, truthfully, it's one of those things that you'll like it a lot more 20 years from now than you do today. It's that 20 years of tax-free compounded growth that's really the whole kicker here, what we're shooting for. Okay, anybody else? We'll leave the line open here for one last question. Anybody else got anything on their minds? Well, again, we've recorded this. So if you want to go back, especially maybe with Rachel's tutorial and replay it to sort of walk through it, feel free. We'll send you a link to the video here in the next day or two. And like we said, specifically, if you've got some colleagues at work that you think would benefit from this, feel free to forward that link on to them, or just reach out to any of the advisors on our team. Like I said, we understand the HP benefit packages exceptionally well, and we're happy to answer any questions you've got. So with that, thank you all again for participating. We wish you a great Friday and a super weekend.
Thank you. This was helpful.
Thank you.
Thank you.